Well, the grain market's got pressure of its own today after yesterday's kind of volatile day, and we've actually got the soybeans headed higher. At last check. On the corn market, though, it was weaker, and wheat leading the way lower. Right now, December corn is down 4.5. It's trading at $3.69. That's 3/4 cent off of the low at $3.68 1/4. March is down 4 3/4. It's trading at $3.80 only 1 penny off of the low here in this contract. Over on the soybeans, the month that everybody's got their eye on is that January. Now that we're getting close to, well, we're almost halfway through November. That November, by the way, just for reference, up 5. January up 4 3/4, 883 3/4, and March is up 4 3/4 at 896 3/4. All right, let's go on to the wheat market. This is where the big losses are today on the negative side. December Chicago wheat down 5 3/4, 502. July, the new crop down 6.5. December Kansas City wheat down 9 cents at 488 1/4. And that's going to leave us just about 1 1/4 off of the low. July down 9.5 at 534 3/4. In the Minneapolis wheat market, we're also lower. It's the December down 3 1/4 at 576 3/4. July down 3.5 at 596. Now the cotton market, it's kind of struggling also here today on the negative side. December cotton down 168 at 77.33. Let's go to March. It's down 141 at 79.13. And let's also go to the edge of this trading floor at the CME Group in Chicago. Scott Gecas, Longleaf Trading here with us. Well, Scott, have you had a chance to catch your breath after yesterday's wild ride? And can you explain what the markets are doing here today?
Yeah, it was definitely a wild ride. You had a huge spike in corn. It spiked all the way up, came all the way back down. That is something that we call an indecision bar. So you have that big tail up, big tail down, closes right in the middle. Big indecision bar. We're going to wait and see how this market is going to really play out for it. That is one of the biggest things that I've seen. As far as the report goes and what came out yesterday, one of the biggest surprises is in the wheat market. So the market is viewing that report as a little bit bearish. But if you take out the China news, the report is actually a little bit of supportive. So it is putting pressure on the wheat market just with the Chinese ending stocks. They added about 7.45 million tons or so. But if you take that out, it's definitely a little bit of a bullish catalyst. The ending stocks are unchanged for Russia. Exports are unchanged for Russia. We expect the exports in the U.S. for wheat to pick up in 2019. We're just going to keep an eye on that 500 level for the short term.
I want to talk to you about all of this volatility that we've had in this market and where that kind of leaves the United States right now. Is this soybean market back here on the positive side, is there an explanation behind it on that?
It's with everything that's due to China, it's all headline risk, and we're going to be watching the headlines day to day, second by second, because no one knows what is going to break. With the soybeans in particular, you know, it's moving a little bit higher. It's a much more resilient than anybody has expected. But that is also due to with the expectations that exports are actually going to pick up. One thing in the soybeans that I want to point out is the talks with NAFTA and Canada. They came out and they said they're having problems with the language in the new NAFTA deal. As that came out, you've seen the Canadian dollar completely move down lower, had a huge move. It has that continuation a little bit today. So we're going to see how all that news and all the headlines are going to really play out in the short term.
Okay, Scott, hang on with us. The livestock trade, we're going to talk about that next. So stay with us here on the Market Day Report. Let's go straight to what's going on in the cattle complex. And we've had a lot of pressure over here. In fact, $2 worth of pressure to the downside in both the feeders and the live cattle. First, the live cattle. That December contract is down $1.60 right now at $114.95. February was as low as $117.50. Now, we've come off of that by $1.15. We're at $118.65. We're down $1.22 right now. April down $1.03 at $120.85. The November feeder cattle down 43. The January feeder cattle down 143 at 144.85. March down $1.25 at 143.22. And April down $1.18 at 144.38. So we have come back somewhat in this cattle complex from earlier lows. For instance, that January we got as low as 143.72, and we're back around that 144.80 level. On over to the hogs now. Here we go with the front month of December, steady. 55.63. February down 10 at 60.02, and almost a $5 spread here between the nearby and the deferred. April down 85 at 65.92. And let's go back to the edge of the trading floor and continue our conversation with Scott Gecas about this protein complex. A little bit of pressure over here in the cattle market, at least on the futures side. What do you make of all of this pressure? We've come back from the lows that we saw earlier in the day.
Yeah, I mean, it bounced really hard off of those lows. It depends on where this is going to close, but we broke that 114 level. It traded down to about 113.92 or so, and on a technical side, that completely broke the chart. So it did bounce above that 114. It's testing around that 115 level now. If we test anywhere near that 114 level again, I mean, it's got a lot of room to run. It could test that 110 level. So we're going to see how that's all going to play, but it's all due to just the supply concerns, short-term supply concerns, the cold storage. They have a record amount of supply. So until the exports actually show up, you're going to remain bearish in the live cattle market.
Late information here. In fact, Marlin Bowling just let us know we just saw 3,000 head of cattle in Nebraska trade at 179 to 180 on the dressed basis. We still have bids out there at 114. Asking price is $4 higher than that at 118. So how much of an influence will the cash trade have on the futures?
That's one of the biggest things that we're watching as far as the futures go. The cash cattle trade is definitely one of the biggest catalysts for direction. So you just said the spread is between 114 and 118. We had very light cattle cash trade around 116. So if the bid is around 114, we're going to see how that's going to play out. If it does trade with a significant amount of 114, that's going to put a little bit more pressure on the cattle market.
Scott Gecas, Longleaf Trading in Chicago. Scott, thank you very much.